Hi, and welcome back to the show. This is Joe Rabil with Rabil Stock Research. So for those of you new to the show, I have been providing technical stock research and consulting to institutional money managers for the past 30 years, and I've started to provide some research to individual investors over the last year or so. Today, in what the way I design the show is that I get stock requests during the course of the week, and the bulk of the show is me going through those stocks and showing the type of analysis that I like to do. And giving some insights into what I'm thinking about those stocks. But at the beginning, I start with a lesson, and typically the lesson is related to different types of technical analysis. But today, what I want to do is go into a little bit more of the psychology of trading and the question that I think of the average person really needs to ask themselves before they put a trade on. So let's go ahead and get into the agenda. So the question, and essentially the question is, am I willing to take a loss on this trade? You know, before you put the trade on, you have to be willing to accept a loss. So in a way, we're going to go into how you want to let go of the trade, number one. Number two, you want to show you how, I'm going to show you how I do all my worrying beforehand. This is kind of something I learned from Dave Landry way back. And I think that kind of approach is going to help you dramatically once you put the trade on. And then the third part of it is once the trade is on, having a disciplined exit approach. And then once we're done with that, I'm going to go through the stock requests that came through. So let's go ahead and get into this lesson now. As we get into the lesson, what I'm going to do is I'm using Chicos as a example of a pattern that has a lot of very interesting characteristics for a breakout trade. I like two different types of trades, a breakout trade and a pullback trade. I'm going to use this breakout trade as the example today. And it really is a psychology lesson, but what I want to do is start out and show you all the things that I like about this pattern. So first of all, I've got break of the downtrend line on the monthly taking place. And if you notice, we've moved up and consolidated back towards the 18-month, which is now rising, and it's above a rising 40. We've got improvement in the MACD. We've got improvement in the ADX based on the buyers, right? Nice strong move based on the buying strength. And we've consolidated back to that level. If you go to the weekly chart, we went through this ABC decline, but this last part of this consolidation pattern was a low ADX condition that I really like. That's when all three of the ADX lines are below 25 for an extended period. That tells me that not only are we have a low trend condition, but we also have a low volatility condition, and that's really what we want. We want a stock that's been quiet and then it's starting. Looks like it's starting to emerge. We can see a liftoff in MACD on the zero line on the weekly chart. Now look at what's going on the daily. We had a low ADX condition for quite some time here. We could even go back more where it was low ADX, and now it's crossing above 25 on this breakout. So yeah, I mean, in the near term, this is the stock I've been highlighting to my subscribers, and I would say now we probably need a little bit of a pullback, but in terms of like the breakout play, I think this had a lot of the qualities that I like to look for. Now, why do I want to go through all of that when I'm talking about a psychology lesson? Well, I guess what I'm trying to get at here is get you to understand that when this trade crosses above this high in a breakout fashion and I'm getting long, I need to have a strong enough commitment in everything that I'm seeing so that I don't start to change my mind on one bad day. So you can see what actually took place on the breakout bar here. The next day it had a bad day. And if you don't have a commitment into everything that you like about the pattern, and if you're not waiting for like all the qualities you're looking for, you're going to start to question it from the get-go. And you might be thinking, wow, maybe I should just get out of this. Because the reality is, once you put a trade on, you have to let go of the trade. Mark Douglas wrote a couple books on psychology of trading. One, Trading in the Zone, that I definitely recommend. And one of the things that he discusses there is essentially once you put a trade on. You have to have a commitment to that trade. You can't oscillate in your opinion. You have to basically let go and surrender and say, you know what, I've put a plan on. I have a plan in place. I'm going to follow it, and I'm not going to get whipped around based on one day up or one day down. I mean, if it's a trading play, that's a little bit different. But this type of a breakout on a monthly and a weekly, you can't let one bad day change your whole opinion on what's taking place. So one of the things you have to do when the stock breaks out is you got to know, first of all, you got to know what your entry strategy is. You got to have that defined in advance. You also need to know where your stop goes in advance. You need to know what type of targets you're going to be taking. What is your profit-taking strategy? What kind of a trailing loss strategy, a trailing stop strategy are you going to have? You got to have that all taken place in advance. And this is what, from what I talked about earlier about Dave Landry and what I learned from him a long time ago, is you want to do all your worrying in advance. Do the worrying beforehand, before you put the trade on. Then once you put the trade on, it's almost on autopilot in a way. And I'm not saying you don't take new data into account, but the vast majority of what you're going to do and what your plan is needs to be written down, and you know this is how I'm going to handle it. And I think if you do that, you'll accept the fact that sometimes I can put on the perfect trade. This is, I wouldn't call it perfect, but it's pretty close. I mean, we have so many good characteristics here, monthly, weekly, daily. Not only that, we've got good relative strength, and on a relative basis to its industry and sector, this stock looks outstanding. So we've got so many good characteristics taking place, but I have to accept that if I put on this trade, which has so many good characteristics, that this might be a loser, okay? This might not be the trade that wins. But I know that if I can do 20 to 25 of these trades over the course of the next 6 months, there's a very high probability that I'm going to come out ahead after that 20 to 25 trades, because I know I've got all these characteristics in my favor. I've used these characteristics for years. I know that, I guess if I put 20 trades on today, that wouldn't necessarily be the case, but if I did that over the course of time, over the course of the next 6 months, just as stocks showed up and looked attractive and put trades that meet all the characteristics I'm looking for, I think I have a pretty high probability of winning at the end of the day. And I think that's how professionals think. Novices think, am I going to win on this trade? Right? I mean, if you're a rookie at this, you feel it's life or death on every single trade, and you have to start thinking in bunches. You got to think about it. Okay, if I do this trade, maybe I don't make money in this trade. But think about it this way. If you risk 1% to your stop loss in each trade, then if this trade doesn't work, you lose 1% of your account. And if you keep doing it that way, you're bound to, I think you're going to be bound to end up profitable after the 20 to 25 trades segment is over. All right. So I just wanted to get that through. I don't talk about the psychology much, but I do think it's incredibly important to having a commitment to your trade when you put it on. Let's go ahead and get into the analysis now. Just briefly, my services can be found at rabilstockresearch.com. The individual package has 2 to 3 reports each week, plus a special video for that package. If you have an interest in trying the service, you can use a coupon code StockTalk and get the first 2 months for $50. Let's go ahead and get into the stocks now. So the index I'm going to use today is Bitcoin, and there's a specific reason why I want to use Bitcoin this week. There were a number of stocks that came through in the requests, and what I really want to explain, and because I spend so much time talking about multiple time frames, I think this is just a great example of how to sort out your time frames and make sure you know what you're seeing. Because on a monthly chart, the trend is down. We're below a declining 18-month line, but you see how far away the Bitcoin has gotten away from that line. That's a pretty big distance. Not to mention the fact that in the process of this big drop, it did come back down to the prior peak from 2018, which was, kind of the outskirts of support. So it makes sense that this is trying to rally here. Now, I don't have divergence in place on this time frame. I have an extended pattern below the moving average. So the trend is down, but it's oversold. Okay, and it is coming into some support. If I look at the weekly chart, I really don't have much that I like here. I mean, the trend is down. We don't have momentum divergence based on either MACD or ADX. The only thing that we can say is that we got pretty far away from the moving average line and pretty far away from the trend. If you notice, the 18-week and the trend are basically the same. They're the same slope and they're the same price. So when the trend line overlaps with the 18-week, and this will happen a lot, we know we have a pretty strong resistance level there to be on the lookout for. But in this case, we can look at this and say, when we're down in here, stretched away from this line, we know we could use this as a target depending on what's going on the lower time frame. So if I want to look at this, I can go and look at the daily chart and see that there really wasn't anything going on here. It was trying to turn things around, but then we actually got a second higher high and then this higher low. The moving averages started to turn. And really, we had a pinch play right at the zero line as they were crossing. And then we had another pullback here with these moving averages rising at about the same rate. And this time we had green DI, pull back and hold. So if I'm going to trade this, that would have to be my higher time frame. In other words, if I look at the weekly, I don't really have a trade because there's no divergence here, so I can't really play this off the weekly. The trend is down. The only thing I can do is look for this to rally up to the 18-week line and then look to see if the daily reverses down. So as long as you understand your time frames, you know what trend is taking place in each. You know what kind of trade you can do. So this is only tradable off the daily trend, and then we'd have to go down to a 4-hour chart to time it. And then we'd use the weekly line, which is up around 27.5, as the target for this trade, working its way back up on the daily chart. So right now we're in a short term. So if I'm looking at this is short term, intermediate term, long term. We're stretched away on the long term, so we do have some room. But the next interference in this trade is coming from the 18-week line around 27.5. We do have some room based on what's taken place. There is a trend on this time frame. MACD made a new high with price, and green DI also made a new high with price. So that pullback, that last pullback, is really playable. And you just got to be very careful because as this hits the 18-week line, I'm expecting to see some resistance at that point. So that would be the target for that move. So that's kind of where that stands right now. If we start to go and look at some of the other stocks, we've got similar circumstances taking place in a lot of these. Now, Lowe's is not stretched away from the moving average, but if you notice, the 18 on the monthly is rising, and it's rising above a 40-month moving average. So we got an 18 and 40 rising, and they're so the trend is up in this. Right? This was a deep pullback, but the trend is still up because this line is rising. Now, when you get a deep pullback on the monthly like that, you should expect overrun on the weekly. And that's what we've gotten here. You see how this overran the zero line on the weekly chart, the MACD? So when that happens and we get a little bit of strength in the sellers with an ADX reading that gets up to about 40 or 50, I know I don't really want to buy this the moment it breaks the downtrend line or crosses the 18. I'm really looking for a little bit more to take place. I want it to maybe rally up a little more and then pull back and hold the 18. And on that pullback, if we can make a low off of that line, then I could trade it for an intermediate term move to the upside. But right now, all I can do is maybe try and trade it off the daily chart, but even that is not really set up very well. So I think in the best case scenario here is this push up a little bit higher to allow this 18-week to cup around a little bit more, and then on the next pullback, we could look to play it if it pulls back in an orderly fashion. Okay, I got a number of requests from a subscriber on the different solar stocks, and I want to start with TAN. So TAN, I think, is really intriguing. The turnaround that's taking place here, I think, is pretty impressive. So this is the ETF, right? We're breaking the downtrend line. and we're getting the MACD lines to cross above. We're showing some strength on a daily basis with the ADX kicking in on this breakout. We're getting ADX to cross above 25. So now I'm looking for a pullback on this time frame closer to the 18 as kind of like the next signal. Now, the reason why I'm not a huge fan of playing this right now is I know I've got some resistance coming up on a price basis, but I've also got a declining 18 month. So I'm crossing this line and it's declining. And I think in most cases when you have a resistance overhead that you should expect some kind of a pullback. Now, if we look at the weekly chart, we're kind of extended away from the 18 week. So, getting some kind of a pullback or pause. Now, this might carry a little bit higher first, but I'm expecting to see some kind of a pullback or pause sometime over the next month, 2 to 4 weeks, something like that. That should set up an interesting potential pattern. Now, I'd like to see this 18-month flatten out, but I just like the makings of what's taking place here I think are pretty constructive based on the fact that this had a really strong move on the ADX basis, confirming it, and then we came down and we held this pretty big support area in the low 50s. Now, CSIQ is very similar to TAN. We've got the same issue. We're crossing the 18-month, but it's declining. Now, the one thing that's a little bit better about this one is the MACD on the monthly came all the way down to the 0 line. So we're getting a 0 line reversal on this time frame, and we're obviously breaking a pretty key trend line. You see how this trend line started here, touched. When we have 1, 2, when you get 3, that's pretty important. When you have 4, that's incredibly important. So we've got a trend line break that I think is key. We've got MACD crossing the 0 line, and we've got some green DI starting to show up after a low ADX condition. The ADX is very strong on the daily chart on this breakout, so we're looking for a pullback. Now, one thing I will say is that because this is rising, and this goes for the TAN as well, because this is rising, we might not get a pullback all the way to the 18 day. It might only come to like the midpoint in this breakout level here. So that could be the area that you're watching for. Don't necessarily worry. If this ADX is rising, a lot of times we won't come all the way back to the 18. So overall, this is a very constructive pattern. We're just looking for the first little pullback or pause as an entry. Now, ENPH is kind of really taken off. This was the first one out of the gates with the nice breakout pattern here on this gap up. It's obviously a little overdone in the short term. I'd like to see it pull back a little closer to the 18-day line before considering. And even that would be a short-term trade because look at how far away we are from the 18-week. The next real opportunity on an intermediate term basis is going to be this pulling back a little closer to the 18-week line. I don't know. I'm not sure when that's going to happen. If you don't want to miss this and you want to be looking for an entry off the daily chart, but just realize you're taking on a little extra risk based on how stretched this has gotten. Last of the solar. So same pattern, but I don't think this is quite as strong. This is just getting up and trying to get through the 18-month line, which is declining. It's not really through that line yet. We've got some signs of improvement getting back through the weekly moving average lines, but the MACD is still below 0. So we're showing the same kind of strength on the daily chart, but you still have price resistance here. So of the 4, this is probably my least favorite. Now, I will say this. If this can develop over the course of the next month or two and it does it the right way, this could have some real potential. But I think I would put this on the back burner for now and be a little bit more focused on something like CSIQ out of that group. Okay, so TTM, I think this is a really good example of a stock that pulled back on the monthly with good ADX. So we make a move up and look at the strength of the ADX, and then we get a pullback to an 18-month line. All right, and we have a nice pattern there, a nice 3 to 5 bar pullback to the 18-month line, and then it starts to cup around. Now, if we look at the weekly chart, we have our opposing trend pattern. That's where the 18 is below the 40. Now this one, the 18 is above the 40 and they're rising. So that trend is up. We know that this trend is up. Now what we're getting on this time frame is the opposite. The 18 is below the 40 and we don't necessarily need the 40 to be declining. But when this happens, the 18 will be declining. So we've got a counter trend move taking place on this time frame. We like this. Now we're looking for what I call an opposing trend trigger, which would be getting back through these moving averages or some sign that things are turning back to the upside and getting back in line with this trend. So that's really what's taken place. So here's the interesting thing. If we look at the weekly chart, we came down and undercut this low, rallied up, and look at what we did. We came into the zone between the 18 and 40 and then came back out and tested this low, which actually held the midpoint of this big bar. Now, the other thing that's really important about what took place is that we broke the downtrend line. And when in the zone, when we went into the zone, we were breaking the downtrend line. And then we came back to test. That's the 2. So I actually like in this one, this green bar crossing back above the 18, probably on the close. And you could be a little bit more conservative and wait for the MACD to cross its signal line. But when you get a big green bar after a test, especially the midpoint of a big bar, and it's the 2, I think you can take this move here, this bar crossing back above the 18. If you don't have all this in place, then you kind of have to wait for this up here getting back above both moving averages. And then in that case, you might actually wait for the first pullback after that. So I think this is just a really good example of a stock that looks good on this time frame. And then we're using entry on the smaller time frame. Now, I'm going to show one more thing. Look at how when this was turning on the weekly chart, we got a pinch play crossing the 0 line right here. So we got the big bar here, right here. And then right after that, we got a pinch. We got another pinch. And actually, we just got a third pinch as this is trying to break out. So we can use all these time frames together this way. This is the trending time frame. This is the opposing trend trigger. And this is our kind of like an early signal to get in or a smaller risk signal to get in after we have a trigger on this time frame. Okay, so once again, we want to sort out our time frames. CVNA, very stretched away on a bearish trend, but very stretched away from the 18-month. This was also stretched away from the 18-week. And if we go and look at what happened on the daily chart, look at what took place. We came up and for the first time, look at what took place. So we had a downtrend, we rallied up and failed, and then we rallied up and pulled back, and we had a tiny little bar that held, turning up from here. The other thing that's kind of interesting is this was this move here and this pullback was the first time green DI held above the red and held above 25. Do you see that? None of these had that in place. So this was really a pretty good signal, which, was right around this, 25, 26, 27 level. And if we have that at 25, 26, 27, we know our target was up around $40, maybe, right around $40, because that's the next time frame resistance. Okay, I know it's gotten through that, but that's not really relevant. When you're taking a counter trend trade, you have to look at where the next resistance level is and the next target level is using the higher time frame moving average, and that's what I would do. So on this big bar here, I would have been exiting after a nice trade on a pullback there. It's a pretty nice setup from that standpoint. So Comcast is a little different. We have a downtrend in place. Yeah, there's some support here. We're not dramatically extended below, but the key thing is that look at how ugly this trend is. Every single time we hit the 18-week, it fails. And until that changes, I just don't think it's worth trying to risk anything, even on a smaller time frame, just because of how strong it is and the fact that we're not getting that stretched away. And signs of momentum divergence starting to show up. I mean, I think we're making a bottom in here now. I don't think there's much downside risk in this, but you just got to be careful. So this is one of those failed new lows, probably going to rally up to 42 or something like that. But just be careful here. It's not an exciting pattern. You might be able to make a little bit of money in the short term. Look at this CMPS. So we had momentum divergence on the weekly chart. Okay, so we have divergence here because this is making a higher bottom. MACD, well, this is making a lower low. So when that happens, we can go down to the lower time frame. If we go down to the smaller time frame daily, we can look for either a 1, 2, 3 setup, or what I really like is when we're using MACD this way, we can look for the first time we get, well, we had a little pinch here that was below the 18. So that's a pretty aggressive entry. Not a bad one, but a little bit on the aggressive side. We have almost a zero line cross here, but this to me is the best signal right here. Why? Because we have MACD holding is above the zero line and we're getting our first pinch, and green DI is above it's and holding red on a pullback. This is a great signal here for a trading move to the upside, which is counter trend to the weekly chart. Okay, but I know I have divergence on this time frame, so I'm looking for an entry on this time frame. I hope that makes sense. SNEX, nice looking pattern. I mean, nice breakout here. It got through 80 in a pretty strong fashion. It's just too overbought right now. We need a pullback in this. You could look for a daily pullback to the 18 or maybe even one on the weekly chart. But overall, the pattern looks pretty impressive. That's it for today. Thanks for joining me. You can find my research at rabilstockresearch.com. If you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.